in-depth analysis on the XOP scalp and how to pick a top, watch for bear traps. Hey everyone, this is my channel to help investors and traders develop a probability-based mindset to succeed. Also try and keep friends informed of what's going on in the markets and the economy, and also a little real estate content as well. This is Dan Max at DXP Realty, aka the Trading Agent, and this is a little XOP I would call bull trap explanation. I know a lot of people are newer to the channel or following me, so I'd like to do some more in-depth videos of intraday action and the things that I look for. Sometimes people think it's like magic how this happens, but there's a logic and there's a trap system that is constantly reoccurring in the market, and I just kind of want to do some clarity on it because it was not an easy trade to get into. It definitely tested some patience and some of the mental fortitude, but it's not like I have not been in a trap before. You trade long enough, you literally get used to everything. So at this point, let's get into it. And again, if you're not in the Discord room, link is in the description below. I appreciate everybody's feedback, liking the videos, slamming comments, just whatever. I mean, that's all mucho appreciation. So let's get into it. All right, XOP. Now again, one of the things that I like to talk about with trading is, what do we always do first? We always zoom out. We kind of know the lay of the land. You always want to know the bigger picture. What have I been saying about the XOP for weeks? Because this is the monthly chart. So this IPO price, the 0.382 and the 100 month here in yellow, as you can see, are all gonna be an issue. How do I know that? Well, let's just think about it. This fund went from 30 to 146 in pretty much a straight line since the COVID bottom. I know there's a war going on. I know all this stuff. Whatever. It all got exacerbated. These moves, again, these oil service companies are going to have to actually produce the inventory to generate the actual value of these companies. Not saying that there won't be a bigger bull market. Don't get me wrong. This is for a scalp trade, short-term materials market short. You look at the monthly, you see very obvious. And what's that? That's an indecision candle, doji. And what did we say? Again, if you've been following the channel, what did I say? I'm like, wouldn't be surprised if some point it bounces back. Some people predicted the 20-day. I thought maybe like 130s. It doesn't matter. Ultimately, that was in your psychology that you knew for a fact that if you were short drip or your long drip, short the XOP, you knew in the back of your mind, you weren't blindsided to the fact that it could get up to the 20-day. And I think this is what was hard about this trade is, look, you held the 50-day. You actually held this blue support zone perfectly, like literally. It got really close to the 20-day, 2 days in a row. And I think that was one of the things that really was frustrating for a lot of people, including myself, is that if you're going to get up here, hit it. And it just didn't. And then it hit it the following day and backed off. And so now what? You can make the argument higher lows, higher highs. Agreed. So you have to have in the back of your mind that if you're scalping this or trading this, at this point, here's the overhead resistance, right? We're into it. Could this turn into the left shoulder? This turn into the right shoulder? Yep, absolutely. I mean, I think that's ultimately what's going to happen here. Now, again, the Fed's doing whatever they're going to do will play out. You know, I'm bullish, bearish, have your own opinion. But this to me is a short. And let's get into the magic of it. So again, we talk about Fibonacci's. You know, you draw your Fibonacci. If you draw the high to the low, what was the 0.618? 138.65. What was the high today? 139 something? 139.04. Okay. The exact price doesn't matter. And I tell that all the time, people. I'm like, you can't predict what the high is going to and the lows are exactly going to be because you don't know who's puking or buying aggressively at the high. And when that wears off, then the market maker is able to turn the boat around, technically. You know what I mean? And if you can understand that, you understand that how traps work, because that's usually what happens. In exhaustion at the high, you get people chasing in. And at the low, you get puking out. So, you know, I didn't mean to move the fib. If you think that you're going to be able to predict to the price exactly at highs, no, you need to believe in your stops first. That's what I tell people. Believe in your stops. And you can always get back in. And that's what happened to me. I ultimately got in early thinking that the 20-day near 20, I guess that drip was near 22s, low 22s, and stopped out. Ended up going down to 21. What was the low of the day? 2160. But the next ads that I was getting under 21, I had what I would call more what's the word? My brain is just farting. Been a long day. More conviction. So my first trade and drip was a little smaller. The next one was bigger because I know in the back of my mind that when I test something the first time, it might be wrong, or it goes a little higher, or it retests. So I don't have this mindset where the first trade I'm going to do is going to be big, especially with day trading. I hope people think about that. Like your first entry into a day trade probably should be smaller because the first time something touches, the first time something hits, it might not back off aggressively. Now, if it does, great, you got some. But let's play the odds. Retest, choppiness, sometimes bull bear traps. Well, if this is a bull trap getting over the 20-day, I have to know that in my mind that my first entry, I got to be small. Because what happens if it rips back to like 141 and 142? Shit, could it get back up to 147? You never know. So if I'm like scalping, even if that's like, again, I know the lay of the land, I'm zoomed out, I've seen that it could ultimately always retest. But if it's a head and shoulders top, I don't know exactly where in the scheme of this over the 20-day the market's going to peak out on this thing. And so again, then that's where we go check out the 10-minute. This is where it gets a little more interesting. So you get this like big gap up, right? Very clear, right? Very, very, I guess, well, did we actually gap up? I can't remember. There's these charts. These charts drive me crazy. Let me change the 10-minute on this particular one. I need to come back and copy that at some point. It's been acting funny. I don't think it was a gap. Thank you, it wasn't. So what did we notice about the action? Boom, big straight line move. And then here you go, the rubber band, man. It's getting more tired. Then you zoom in. What do you see? You see some dojis, you see a pullback, you see some indecision, boom. Little doji sandwich goes higher. Doji, long wick, boom. Now look what's happening. This looks like distribution to me. I know it looks like it's popping back, but keep in mind, like, as long as you stay under the 20 period for the 10-minute, I think it's bearish. So you saw, like, again, the indecision. Now, there's no volume because it's the day before the Fed day, but what did I say earlier in the videos from this week and the weekend? You're going to have extremes. Please trade them. Feel free to trade them. Do not get locked into one move up or down. The markets are going to go back and forth all over the place in front of the Feds because the Feds can't navigate a soft landing, but people are going to start rumors. They're going to say this and they're going to do that. Don't believe all the bullshit. Know in the back of your mind what's actually going to happen ultimately. The Feds cannot navigate a soft landing. Doesn't mean that we can't pop back. Just because they ultimately say they're not going to raise rates fast enough, well, they did 2 rate hikes and we already went into a recession. This is a problem because the Feds are trapped and they can't navigate a soft landing. And that doesn't necessarily mean the market has to tank tomorrow. But I said this in the previous videos. Yesterday's action on Monday did not feel capitulatory in the sense that everyone was panicking. When I see panic, I want to see Apple. And again, this video is now stretching into other topics, but whatever. I want to see Apple down. I want to see a day like that. That's capitulatory. This is not. That is not capitulatory. I want to see Apple get throttled. I mean, I can't even, where's the last time Apple got throttled? I want to see like some action down here, like a big gap down or open and close down a little. I mean, that's not even when the VIX was high. Apple's just been on such a big monster run. Or a capitulation, same thing, the opposite. I want to see a big pop-up to fail. Here you go. After a decent move, again, it's all relative now. Apple's trades so much, and so you have to say in your mind, like, well, what's a relatively big day for Apple? 10%. I'd want to see a 10-day travel range. Like, I want to see Apple down 15 points and rally back, not down 3 or 4 points and then rally back like it did yesterday. Like, that didn't really see like that big a deal. Like, you closed at 158, you got down to what, 153, 5 points. Come on, that's not capitulation. Not on Apple. 3%? No. All right, I hope this kind of helps. Let's see how the XOP closes. Now, again, what did I say earlier? If you're waiting for the 20-day to short, it may have bounced off the 20-day, and that's what you kind of got if you look at intraday action. I'm not surprised that you hit the 20-day and you bounce back. That's why I'm always trying to get near the highs if I'm going to short, because what happens? Then I don't have to get it. Like, if my entry is great, I don't have to worry about all the noise in between, because this action can hold up longer than sometimes you can, like, if you're getting, so here's an example of a previous, say you shorted XOP and you got up near the highs near 137 and it retests, you're like, I don't know. But I mean, you got time is not in your really favor. I know that's after hours. Let me try to find a better example. Here you go. If you got in here short and you got the retest, you're not too worried. And all this action was just gravy. It just kind of led to what was going to happen. That's really key with getting in a good trade location. Now, again, people say it's risky. You're picking tops and bottoms. Guess what? Trust your stops. If you trust your stops at tops and bottoms, you're going to have better risk profile entry and exits every freaking time because you're going to get closer to them. And again, you're going to layer in. So keep that in mind. If you're shorting, don't go all in at the top. Take a piece, and then if it retests, you add and you tight stop it. That's all you have to do. And then now what? You're literally going to lose a small amount of a bigger trade because now you potentially have identified the high. If it works out in that way, such an easy trade, y'all. All right. I hope this stuff helps. Stop by the Discord room if you have any questions. I appreciate everybody. Slap a like and please subscribe if you're new. Hey, thanks for watching. If you have any questions, stop by the Discord room. A link is in the description below. Also, if you'd like to help support more free content, the PayPal link is in the description as well. I appreciate your continued support of the channel.